Hey guys, welcome to week 10 of the Better Life Masterclass. This is the final week. Excited to be with you guys one last time. And this last one's just really a summation of everything we talked about. The title of it is Having a Better Perspective. So we've talked about so many things, and it just all rolls into like the whole point of better life, and that's like having a better life. Like, what are we doing to improve our life in every way possible? And of course, this class is based around real estate. But the foundation of what I hope most people got out of this is to think of your life, your family, whatever, if you're single, just you as a being, and then your life and those people that are around you that are important, and then building your business around you so you don't have to have that very frustrating, head against the wall work-life balance that it just doesn't work, guys. So in my opinion, just make this a lifestyle business, real estate, and build what you're doing around your family. And that's what this last hour, or this will probably only be a half hour, this week 10, but it's to just have a better perspective on everything you're doing in every way you live your life, not just in real estate, but just being upbeat and positive, and just having the goals that just lead you down the path to a better life. So for real estate purposes, we've talked about better education, better data, better strategies and assets, better math, better debt, better teams, better leadership, better marketing, specifically with social media, better networking, and better like property management or project management. But I really roll that into like really how you're managing your property, because we talked about leadership and teams and like hiring people. So really just your property management, how you're going about that. Property management is like the most thankless job in the world, but it's also the most critical for what you're doing. I mean, if you're not having your assets taken care of by somebody that's responsible, then what's the point of investing in real estate? It's similar to having a really good fund manager. If they're squandering your funds, then what's the point? Don't let them run down your property. So property management, which was week 9, and then now the better perspective. So we're going to just talk about a few things on how to stay just in tune with what you're trying to do, and just stay on the path, because it's really easy to get derailed. It's really easy to get shiny object syndrome and just go down different roads that you really shouldn't go down, and just trying to stay focused on everything that you're doing. And that's what week 10 is about. So the first part of having a better perspective is just staying informed with your market, with what your people are doing, with what your teams are doing. Basically, all 10 weeks or all the other previous 9 weeks all rolled into one. Stay informed with everything you have going on. Don't let ignorance just make your business go to the wayside. Don't ignore things, and just keep track of everything. Keep up to date with the latest trends in the news, in the real estate industry, in your markets, especially the interest rates. We all know that those are all over the place. New policies, new laws, and market trends. This includes keeping an eye on market conditions, interest rates, and economic indicators. What areas are growing, what areas are declining, what's booming, what's not. Things shift all the time, and you just want to be ready for it. And sometimes you need to sell things off and reinvest in other areas. So keep that in mind as well. So I want to talk, when you're thinking about a better perspective, we've talked about a lot of things throughout the other 9 weeks, and I want to talk a little bit about diversification. And I'm not talking about diversifying outside of real estate. So, and it's not a bad idea. I know that a lot of people feel like, okay, don't put all the eggs in one basket, meaning don't put everything that you're doing into real estate. I don't think that's a bad idea at all, though. Everything that I invest in is in real estate. I used to have a 401k and a 457 account, got rid of those, put them all into real estate. Used to have mutual funds, got rid of those, put them all into real estate. Everything that I do is in real estate or a business related to real estate. But I mean, it's not bad to diversify outside of real estate. I just don't do it because the returns aren't anywhere near as good, and the tax benefits aren't anywhere near as good. So for today's purposes, we're going to talk about diversifying your portfolio within real estate only. So diversify your portfolio or don't. Diversify your real estate investments by investing in different types of properties, locations, and markets. So it's not even just asset classes. It's different locations, different things that you can do for your assets. So for instance, I own a lot here in my market in Lubbock, Texas, and I also am part of syndications as a limited partner in markets all over Texas, Florida, Georgia, buying a house in Las Vegas, just trying to expand in different markets, Austin, and try to diversify that way, because I love having things here, but I like to travel and I like to go to these places that have my real estate. So it's nice to have different properties in different places. And then talking about different asset classes, though, that's the next thing. So you've got single family homes, multifamily homes, Airbnbs. You can flip property, self-storage, lending. You can become a lender. Commercial, like strip malls and corner stores and buildings and whatever. Development, and then it's just more and more and more. I would recommend, especially if you're a new investor, if you're a seasoned investor and you found what you like, just keep doing what you like, stay in your lane. But if a new investor, when I talk about diversification, try different asset classes, see what you actually enjoy. And the reason I say diversify out amongst some of these asset classes is because real estate is best served if you stay in it as long as possible. And you're unlikely to stay in real estate for a long time unless you have a passion for what you're investing in. So if you find that multifamily is horrible, but you keep buying it anyway, you're eventually going to burn out. If you find Airbnbs horrible, but you keep buying them, you're eventually going to burn out. But like me, I have Airbnbs, I've had other Airbnbs, I've had a lot of multifamily, and I've done a lot of single family. And through the 15 years I've been investing, I always resort back to single family, because the other asset classes, although they're fantastic for various different reasons, I personally don't find a lot of joy in investing in those asset classes. And a lot of people find that crazy because they hate single family, but I love single family homes. And that is the reason that I have found so much success and created so much wealth in real estate, because I found what I like to do, and I stayed very consistent what I like to do year in and year out, over and over and over again. And I stayed in it so long, and I accumulated so much property and so much equity, so much experience, that it's paid off. So that's what I mean by diversification. If you find something you love and you spread it out and invest in different things, and you find that niche, then go with that, because your passion is what's going to drive you to stay in real estate for the long haul. And real estate can make you a lot of money fast. You could become a millionaire faster than any asset class that's out there, stocks, mutual funds, or whatever, maybe not building a business or whatever, but you're not going to get there, well, at least not happily, if you're frustrated with the asset class that you're investing in. So make it fun, make it enjoyable. So invest in some different things, find out what you like, research it, talk to people, go to networking events, partner up with people, and find out what drives you. And I think that you're going to really enjoy it after that. So you'll stay in the game, and then consistency is key, just to stay in. So most investors fizzle out after a few years, and then those are the people that you'll talk to that will tell you real estate's terrible or whatever, and that's just because they didn't find what drove them. They didn't find their passion. They didn't find something they enjoyed to do. So I don't even buy a whole lot of single family homes anymore. So I've even elevated from there. I still buy new construction. That's all I buy. And it's only single family homes in good areas. But what I enjoy more is now building businesses around real estate type style businesses. That's where my passion is, and I'm going to try to stay in that for the rest of my life. So excuse me, you just need to find what works, find a passion. And then focus on long-term gains. Long-term. We all know, and I'm repeating myself, but we can all make money quickly with real estate, especially if you're buying distressed properties and burning them and just doing that over and over and over again. You can create a fortune pretty quickly. but the focus still should be on long term with real estate. The longer you stay in real estate, the better. We all know that, and you can do both. You can create wealth quickly, and then you can create even more wealth by staying in as long as possible. And that's why I say find your passion. Real estate investing is a long-term game. Don't get caught up in short-term fluctuations in the market. You can make a lot of money, but don't let that be your only driver. Instead, focus mostly, not all of it. You can do those short-term flips, distressed properties, burning, whatever short-term, but focus on making smart investments that you can provide sustainable returns over your entire life. Because again, it's hard to teach 10 classes and not be repetitive. So when I think of real estate, when I teach people, my clients, real estate, I try to get them in the mindset of thinking financial independence as quickly as possible. To me, that is the best part about real estate. It's not to be a hobby. It's not to just dabble in. It's to be very intentional about it, to get to the point as early in life as possible to be financially free. And again, being financially free doesn't mean you have to buy 200 units or even 100 units or even 50 units. If you can live off of and be happy with only $80,000 a year, you only need to replace $80,000. And you can do that with 20 properties, 30 properties. So it doesn't take a whole lot if you can happily survive and live and comfortably off of X. So find your number. And I did this very early in my career. I got caught up in just accumulation, just having to have so many properties. And 650 doors later, I was miserable. It did not work for me. I was making more money than I ever thought I would ever make, but I was not happy. So instead, I just got rid of a lot of them, kept the best properties, bought a whole bunch of my time back, because 650 doors, the real estate's not passive like you think it is, unless you're a limited partner in a big syndication. Real estate, even if a property manager is involved in it, real estate is very, very active. Don't let people fool you on that. So I was working all the time, just managing the manager, basically. So I was unhappy, so I got rid of a lot of my doors, and kept just the good ones, and bought a whole bunch of my time back, and found my number that I needed to survive. I could be making more money if I wanted to work more, but I wanted to actually work a lot less. And that's where I found my true happiness, is working less for less. I don't need what I had before. I was able to pay everything off, which was great. I always talk about the no personal debt. And that's where I stand, just on being intentional about it, is I got to a point where everything is taken care of, my living expenses are always taken care of, and then I have time to do what I want, which is building companies and coaching other people and doing things that I like to do. That's where I try to get people to think about real estate, not just the massive accumulation of doors just for the sake of accumulating doors, because I did that. So be very intentional and focus on long-term, not just long-term building and building and building, but long-term living the life that virtually nobody else really gets to live, because most people are working until they're 70, maybe older now, and maybe getting some Social Security, maybe getting the average 401k balance is like $300,000 or $400,000, maybe getting a little bit there, and but you can do it so much sooner. I mean, in your 30s, in your 40s, you could virtually half your life be financially free if you do it intentionally, and that's what I'm talking about. I'm not talking about just massive, massive, massive amounts of money. I'm just talking about what you need to actually live financially free. And for most of you, I'm not talking to everybody, because some people just really need that drive, and that's great too. But most of you will find more happiness in your life if you just find your number and then just have that financial independence for as long as you can, for the rest of your life. So it may take a lot of time and trial and error to get to that mindset, but most people come around to that pretty quickly when they realize, oh, this is really nice to be able to do what I want. So the longer you stay in real estate, longer you stay in the game, the bigger the future will be. So just stick with it, and that's why I'm talking about finding your passion. And buying right and wait. I think it was Charlie Munger who said, isn't Charlie Munger? Yeah, he's Warren Buffett's partner, I think. I think he's the guy that said, the real money is not in the buying and selling, but in the waiting. And that quote, that hit me so hard back, several years ago when he first, I think it was him that said that, but it makes so much sense. I mean, obviously you make a lot of money when you buy because that's, everything goes up from there. And then you cash in on that when you sell, but you make a lot more money in just waiting as long as you can because you buy low enough and then that same piece of property over a year in and year out forever, you can basically just pay it down, refinance, pay it down, refinance, pay it down, refinance, and never pay a penny of taxes on it because it's all debt. That's the strategy I use, and it's fantastic. So, and the longer you do that, the more equity you get from your tenants paying down your debt. So that's what's fantastic about that model. So when you're in doing your long term and thinking long term and buying a lot of real estate and holding it for long term, the best strategy you can have at the very beginning is setting yourself up right. We talked about all the ways you can set yourself up right, but the number one thing you need to do when you're buying your properties is just make sure your due diligence is there. So before investing in any property, no matter what it is, conduct a very thorough due diligence because you don't want to get a property and then realize that I've been there, it's just terrible. In fact, we're selling a 15 unit right now that we bought years ago, and it's been nothing but a mess. And it's under contract, it's gonna be sold, and I can't wait till it's sold because we did not do our due diligence on that property. So even after, I bought it 2 years ago, so after 13 years in investing, still did not do due diligence on that deal. But that's sometimes what happens when you just find something and I think it was during COVID, I think we were bored and we just picked it up. So, but it's being sold and we're happy about that. But do very good due diligence because that's gonna help your long-term gains so much more. This includes researching the property's history, market conditions, and potential risks. Set yourself up right from the very beginning and then let it ride over the years. Buy it right, avoid super heavy maintenance issues. Plumbing's gonna be your number one issue almost all the time. If the roof is good and the mechanical is good, outside of that, it's plumbing that's gonna crush you. So just make sure that's all good. And you could basically tenant-proof a house that can just make you money forever if you just buy it right. So, and then be very, very patient. This is the hardest part for a lot of entrepreneurs because I'm part of that. I'm not anymore. Now I'm very patient with my properties, but at the very beginning, it's hard to be patient and really just write it out and see what happens. But what I would recommend you do is in Excel, and I can send this to you if you want, just hit me up, is to just get a really good, and they're all over the web, but I can send you the one that I've created. It's a very good amortization chart, and you can play around with it, and it's just wonderful every month to just kind of like check it off. So most of my big portfolios that I have two that, well, I have several, but two of them fall on the 16th of the month is when my note is due, and my birth date is on the 16th of the month. So I like to always check off, like I go into Excel, I open my Google Sheets, my Excel and Google, or whatever you call it, and I like to just highlight that month and I just see the equity buy down that everybody else is paying for. It's fantastic. So that's what I recommend you do. It'll make it more fun, it'll make it a game, and if you can just see that big equity that somebody else is paying for, by the way, you're not paying for it, and it just keeps going down, 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 and down, it will make it, it'll just make it more of a game and just more fun for you as you do it. So, and I'll send that to you if you guys want. And then it helps with being patient. It helps just seeing that accumulate and accumulate and accumulate and accumulate over time. And then you just see like how great it is that somebody else is giving you that much money on paper that you can, and then you can also adjust it to where your market value is going up too. So you've got the debt pay down and you got the market value going up and you get the depreciation in there, and it's just awesome. You can, and I think during one of the classes, I think it was Better Math, I was talking about the ROI, and that's what I put into my own ROI. I build in my debt pay down by the tenant and my equity increase by the market value going up, and I calculate that out into my ROI. And you just see like what would normally be like a 15 or 20% ROI or higher approach, 50, 60, 70, 80, hundreds% ROI on your original investment. It's really cool. That really helps me be patient to have it built out that way because I actually can see what's happening. So I'm very nerdy that way, and I recommend that if you have a hard time being patient, to build out a sheet, amortization schedule, and play around with it, and just make it an event for yourself every month that you go in and you when that note is paid, that you recalculate your ROI and add that in. Because that you're not realizing that, of course, because it's not cash on cash. It's just on paper, but it's equity that you have. It's net worth that's been increased on your net worth statement. So it will help you be more patient. So I challenge you to do that if you have a problem with that, because I had a really big problem with that very, very early on. So we all know with real estate, you absolutely can make money super fast. You can make an absolute fortune. But if you are patient, the longer you stay in the game, the better. And this is why I stress so much to find the asset class that you enjoy doing. I don't want anybody to get burned out. And the longer you play around with that and go and just deal with it that way, then it's good. So. But that's Better Perspective in a nutshell. What I really want to drive home with everybody is just like live a life like your financial life. Obviously, everybody has their friends, their family, their community, things going on privately. But your financial world can impact those so positively, and through real estate especially. You can find that income. It's not passive. I'm not going to say passive. You can find that extra income that lets you work a lot less than a regular job. So not entirely active, but definitely not entirely passive. That allows you to buy back a ton of your time and accumulate, more property, build businesses, and actually live that better life that Brandon's always talking about. That's the whole point of him creating this business. This nonprofit business is to enhance people's lives, and mostly through real estate, because that's what he's done through real estate and businesses. And that's why most of you guys are on this call today, this course today is to do that same thing. So if you have any questions about it, this is the end. So if you have any questions we've gone through 10 of these. I've answered hundreds and hundreds of your questions. I've connected with a lot of you. I think I answered about 25 questions today alone. And please reach out, continue to hit me up. If you're part of this class, I'll continue to answer your questions. And if you really want to go deeper than that, then just give me a call and we can talk about it. So anyway, it's been awesome. Thanks everybody. 10 weeks is done. It's great.